This morning, the Reserve Bank steps into the cryptocurrency debate, warning households against buying into fads. That's our main story. Also today, National Australia Bank considers home loan discounts to green customers, Treasury Wines doubles up in the US, and how poker machines made one company nearly $1 billion. It's Friday, the 19th of November, 2021. Welcome to Fear and Greed, the business podcast that sets you up for a successful day. I'm Michael Thompson, and good morning, Sean Aylmer.
Morning, Michael.
Then stay listening for Sean's chat to Scott Jungwirth from luxury Swiss watchmaker Tissot. But first, Sean, as I mentioned, the Reserve Bank has waded into the cryptocurrency debate, saying privately issued digital units could suffer if central banks issue their own versions of digital currencies.
Yes, Michael, the bank's head of payments, Tony Richards, said central banks could issue digital versions of cash and allow regulated banks to do the same, undermining privately issued cryptocurrencies. Now, privately issued cryptocurrencies are those without central bank backing, so it's all the big ones, Bitcoin, Ether, Binance, etc. Mr. Richards said there were many plausible scenarios which would challenge the current enthusiasm for cryptocurrencies. That includes an excessive use of energy by them and greater focus on how they facilitate the black economy. As we know, some of the main digital units like Bitcoin have absolutely surged in value this year. Now, Mr. Richards expects global central banks and regulators will ensure they keep control of digital finances. He also said it was likely that some central banks will issue digital currencies at some point, while commercial banks might be allowed to issue stablecoins. Now, stablecoins are a digital currency that's pegged to a fiat currency.
My perspective of the Reserve Bank has always been that they're pretty conservative in what they say. Is it normal for them to talk about this kind of thing?
No, not really, and that's why it's so interesting. Mr. Richards has run the payments area of the bank for 10 years. He's about to leave the bank, but he's a pretty conservative character. Now, he also warned that fear of missing out had driven incredible spikes this year in cryptocurrencies, adding that there was too much hype around digital units. He said if a central bank digital currency hit the market, he didn't say the Reserve Bank would do it, but he's talking about as if a central bank does do it. Households might be more likely to gravitate to them and be less influenced by fads. Clearly, Mr. Richards isn't a big fan of all the digital currencies out there, though he agreed the cryptocurrencies had their uses, particularly in an increasingly global marketplace. He also said that the Reserve Bank thought the blockchain technology behind digital currencies had many uses. Now, funnily enough, he conceded that he actually bought some Bitcoin back in 2014, but he said he's only a very, very small investor. All in all, this sort of commentary does no favours for cryptocurrencies.
Yeah, interesting one. How did markets perform yesterday?
Well, the S&P ASX 200 finished 0.1% higher, having fallen sharply in early morning trading. By the close, the bourse was trading at 7,379 points. The real estate investment trust did well, so too the telcos and healthcare stocks. The energy and financial groups did not so well. The Commonwealth Bank continued its slide, falling 1.6%. That's on top of the 8% drop on Wednesday. Incredible fall for that company. ANZ also fell yesterday, down 1.3%. Westpac was off 1% and National Australia Bank was down 0.7%. Remember, this is all about fears that their profit margins are being squeezed. The banks have very few friends at the moment. The other side of the coin, though, Telstra jumped by more than 2%. It's very good news for its 1.1 million shareholders. It's now up 32% over the past year. It's done better than the big four banks and better than the big miners. In fact, it's done better than 3/4 of the top 20 stocks.
Just looking overseas briefly, Sean, in early afternoon trading, Wall Street is fairly steady with the S&P 500 and Nasdaq up slightly and the Dow Jones down slightly. European markets are down overnight. We'll be back in a moment with the rest of the day's business news. Sean, plenty of stories around this morning. National Australia Bank, this is something a bit different. They're going to offer home loan customers lower rates if they reduce their household emissions.
Yes, it's a very innovative way to attract customers. NAB's Chief Executive Ross McEwen yesterday said the bank was part of a global alliance hoping to reduce carbon emissions. The alliance includes lenders from the United Kingdom, Singapore and New Zealand, and had worked with an Adelaide-based startup to create a home sustainability tool. The tool, known as Greenhouse, provides tailored insights to encourage households to set up smart meters and install solar and batteries, that type of thing. If rolled out, households basically will much better know their carbon footprint. For the banks, they'll get a view of the emission intensity of the home lending in portfolios, which they'll have to get eventually. Mr. McEwen said National Australia Bank was looking at giving interest rate discounts to the borrowers using the technology. That's very unusual. This is a whole new world for the ultra-competitive mortgage market, and it could trigger lower home loan rates for some environmentally conscious customers.
Now, Sean, Treasury Wine Estates will buy premium Californian winemaker Frank Family Vineyards for $434 million. Treasury does seem determined to make some pretty decent headway in the US.
It sure does, notwithstanding it's got a bit of a checkered past in that regard. Frank Family is the number 2 player in the luxury Chardonnay market in the US and sells wines in the $38 to $225 bracket. Treasury Chief Executive Tim Ford said the acquisition would sit well with the group's own brands in the US. Now, it's part of Treasury's efforts to shift up the value curve, particularly in the United States, and sell more premium wines. Treasury's strategy, of course, was decimated about 12 months ago when China placed large tariffs on its exports. It's now pushing into other countries, and Treasury has a great distribution network in the US, so obviously they're focused on that market. But the group definitely has a checkered past in the US. Treasury's forerunner, Foster's, spent $2.9 billion buying Beringer Wine Estates in 2000, and that basically proved a disaster.
Sean, there's a pretty disturbing story in politics at the moment, and Prime Minister Scott Morrison yesterday condemned the threats of violence in Victoria around the Andrews government's controversial pandemic legislation.
He did, and he was supported by Labor frontbencher Tanya Plibersek, who said the rise of right-wing extremism in Australia was disturbing. Labor leader Anthony Albanese said there was no place for the threats Premier Daniel Andrews had to endure earlier in the week. Counter-terrorism police have charged a Victorian man who allegedly encouraged anti-lockdown protesters to carry firearms and execute Premier Daniel Andrews. Michael, I hope they lock him up. Look, at the heart of the debate is the Andrews government's new pandemic laws, which critics say give the Premier the power to declare a pandemic and the Health Minister, rather than the Chief Health Officer, power to make health orders. Several high-profile Victorians have backed the campaign against the laws. Yesterday, it was supposed to go to the upper house, but didn't quite make it after a motion to delay the debate was passed. It was pretty timely for the Andrews government because dumped Labor MP Adam Somyurek, who was sacked from his ministerial duties in the wake of branch stacking allegations a couple of months ago, returned to Parliament yesterday, having been absent, to vote against the legislation. If the vote had gone ahead, it would have resulted in a tied vote and the legislation wouldn't have passed.
But Sean, there is some good COVID news for Victorians.
Yes, from today the state will return to near normal. Premier Daniel Andrews, notwithstanding what he's been through the last few days, was pretty bubbly yesterday. He said there's no more caps or closures or rules in terms of how many people in different spaces. You can dance, you can have a drink standing up, though Victorians will need to keep wearing face masks in high-risk settings, such as aged care, public transport and in retail. Victorians, more than anyone else, deserve a bit of a break. Now, the state recorded 1,007 new COVID-19 cases and 12 deaths yesterday. Its vaccination rate is 88.5%. New South Wales recorded 262 new cases yesterday and 3 deaths. Its vaccination rate is 91.4%. The ACT recorded 25 new cases. Michael, the national vaccination rate is now 84%. And the one-dose rate is 91%.
That's pretty impressive. Now, I mentioned at the top of the show this story, Sean. Aristocrat Leisure reported a big jump in earnings yesterday. It's become a major company and a major exporter.
Sure has. The poker machine manufacturer made revenue of $4.7 billion for the 12 months to the end of September. That is a lot of poker machines. Net profit was up 81% to $865 million. As I said, that is a lot of poker machines. Aristocrat still expects to buy UK-based Playtech in the first half of next year for $3.8 billion. Playtech's a gambling software company. We found all that out yesterday. Now, Aristocrat is really good at designing new games, both on poker machines and virtually. And it's actually a bit unfair to call it a poker machine manufacturer because really it's much more than that. Its Pixel United business is a major player in the mobile-first gaming industry. So, Michael, when you see your kids, and maybe you find yourself, peering at a screen playing a game, it could well be an Aristocrat product. It's also one of the best performing local stocks. Notwithstanding its more than 3% fall yesterday, over the past 12 months, it's up more than 30%, about twice the level of what the ASX 200 has done.
Not too bad at all. And Sean, Rupert Murdoch fronted shareholders yesterday, taking aim at the tech giants.
He did. You don't see Rupert Murdoch around anywhere near as much. The 90-year-old executive chair of News Corp said Facebook and Google try to silence conservative voices, colluded, and were overly powerful in the ad tech space. He also said allegations of collusion contained in a recent complaint by the Texas Attorney General were extraordinary. If you ever want to see extraordinary allegations, go and read that Texas Attorney General report. Mr. Murdoch is right. He also had a crack at Donald Trump, saying the former president should stop thinking about the past and move on from his loss at last year's general election. I'm not sure whether they're still friends. Perhaps.
Running through some of the other stories around today, The Australian is reporting that Gina Rinehart's Roy Hill mine has doubled its profit this year to $4.4 billion. The iron ore mine in WA's Pilbara region is majority owned by Mrs. Rinehart's Hancock Prospecting and benefited from soaring iron ore prices across the last financial year. The number of Australians doing trade apprenticeships has soared to an all-time high. This story is also in The Australian, which is reporting that the surge in apprentice and trainee numbers to fill gaps sparked by border closures represents a massive turnaround in the jobs market. ANZ has updated its house price growth forecasts. It's always worth listening to the major banks' view of home prices because really they just lend so much money for mortgages. ANZ economists expect house price growth to peak this month or next month before rising 6% next year and then falling 4% in 2023. The strongest performing markets next year are expected to be Brisbane and Hobart.
Trade, Tourism and Investment Minister Dan Tehan has met with counterparts from the US, Singapore and New Zealand to discuss opportunities to expand economic cooperation. They talked about sharing priorities for the Indo-Pacific region, including enhancing supply chains and growing the green and digital economies.
Sonic Healthcare says earnings in the first 4 months of this financial year were up 16% on the back of higher revenue. The group has undertaken 36 million COVID-19 tests since the pandemic began and administered 1 million vaccinations.
And Evolution Mining's share price jumped more than 8% yesterday after announcing a $1 billion acquisition of the Ernest Henry mine in Queensland from Swiss giant Glencore. The deal will give Evolution exposure to both copper and gold and continues a trend for gold companies to increase holdings of copper. Copper, of course, is used in electrical equipment. It's a green commodity. Everyone wants those at the moment.
Now, Sean, what's the key overseas news this morning?
Bill Gates was talking yesterday and he said that he thinks by this time next year, COVID-19 will be no more deadly than the flu. The billionaire philanthropist and founder of Microsoft has thrown millions of dollars towards research to end the pandemic. He said between natural immunity, vaccine immunity and new oral treatments, the death rate and disease rate should be coming down dramatically. India's Prime Minister Narendra Modi also waded into the cryptocurrency debate yesterday, saying nations should cooperate to regulate digital units. Speaking at the Sydney Dialogue yesterday, he said it was important that currencies weren't used in an unlawful manner as it could spoil youth. So, in 24 hours, Reserve Bank, Indian Prime Minister. The drums are beating, Michael. And finally, there's a lot of concern for Chinese tennis player Peng Shuai, who has gone missing. The Women's Tennis Association says it's unable to independently verify her whereabouts weeks after she'd made allegations of sexual assault against a former Chinese government official. Very, very worrying.
Yeah, it certainly is. Now, up next is the Daily Interview. And today, Sean, you're talking to Scott Jungwirth from the luxury Swiss watchmaker Tissot.
Yes, I have a guilty secret. I really like watches and I don't have a Tissot. And I had to admit that to Scott. But it's a really interesting chat about the economics and marketing of watches in Australia.
Yeah, absolutely. And really how a brand that is 170 years old is able to kind of still be relevant.
Absolutely.
That's up next in the Fear and Greed playlist on your podcast platform or at fearandgreed.com.au. Thank you very much, Sean.
Thank you, Michael.
It's Friday, the 19th of November, 2021. Make sure you followed Fear and Greed on LinkedIn, Twitter and Facebook, and you can always find more information and sign up for our free daily newsletter at fearandgreed.com.au. I'm Michael Thompson, and that was Fear and Greed. Have a great day.